Hello.
So I will share the question. I don't know if you have this, but I will share the question. So are you able to see the question?
Yes, can you hear me from your side?
This was a custom settings. I don't know which settings, but I just got the question, but I don't know the setting. Which was it?
Hello.
So the question is asking that you are a new audit client, Safari. You are a new audit client.
Hello, can you hear me?
First. Got all this. So it's saying you are a new audit client. Safari Limited began operation in 2021. Unfortunately, the Safari Limited has not availed the audited financial statement for 2021 due to disagreement with the former auditor. After observing all the protocols, you proceed to audit the financial statement for the year ended or 2022. The client uses a part-time accountant whose work is to update the prime books, prepare bank reconciliation, and the sum aspect of the ledgers. Another point, you've been told that after analyzing the records, you are able to extract the following information. So they have extracted the cash account or the bank account here, the bank ledger, the cash ledger. We also have another, let me increase a bit. We also have account receivable ledger and account payable ledger, account payable ledger. And then we have now the valuation, building, accumulated depreciation, all the way to the additional information. Let me see if I have a PDF for this I can share so that you can follow.
Hello.
I've been trying to check whether I can get the PDF one or the settings, but before that, maybe I can share so that you will find the setting later. Or is your contact again?
Can you hear me?
So check your WhatsApp. I've shared the PDF one so that. No, I can't hear you. Sikuski.
What?
Umejoint na audio. Naona tu unaongea but sikuski. Are you able to hear me?
Yes.
Unasikia? Okay, so if you can't hear me, that maybe if there is any challenge, then you can query on the charts. There is no problem. So I've shared the questions, so you can't go through. You find, I don't know which is which question, but you can find it. I think the first one or the second one, the one for Safari Limited. So just download and go to the one of Safari Limited. So if you have got it, then we can look at these some of the few functions before we come to that question, how to use the SUMIF function, because we are applying this advanced Excel function to you or to do automation. Even though this question, we can do it normal, and then thereafter you can do automation. So we have an Excel function called SUMIF function, and also we have what is called the SUMIF function. So these two functions can help you to do a lot of work or the data analysis. This sum, it sums the certain range of data given that you satisfy the criteria. Given that you satisfy criteria, a good example is that assuming this is our criteria, we have learn at valuation and building at cost. And then we have so many data. We have so many data, not this one only. We have a lot of data here. We have a lot of the repeated data with the same characteristics or with the same characteristics. So let's assume we have so many data with the same characteristic or the same features. So what you do, we need to apply this SUMIF to get the summarized information. We use this one to get the information. So for example, what I can do first is to copy all of this data in the column C and then paste in I there. And then from there, I can remove the duplicates. I can remove the duplicates by going to data and then remove the duplicates here. Duplicates this X. Mine is 365. So haijaandikwa duplicates hapa. But if you are using the other one, 2016, it has been written here duplicates. So if I click remove duplicates, it will ask me from the column 1. And then from there, from this big list here. So this SUMIF function can help you now to get the sum of the summarized information of this, like the valuation of land, the cost of building, accumulated depreciation, and the inventory. How? We come here and say equals SUMIF, and then our range, range. So the range is where easy ledger mali ziko. So this ledger, we have it here in column C. So that could be our range. That could be our range. So once you have that, you click that column C, that is your range. And don't forget, we said, whenever you are using a formula, you make sure that you lock that column. So we need to lock the column C by pressing FN4. Kuna keyboard zingine, ukipress F4, ita lock immediately. But kuna zingine, you have to press FN plus F4 so that you can lock that. So after locking that, I can put a comma here, and then it will ask me the criteria. The criteria is the one I want here in my ledger. So this is my criteria, and I put a comma. Now the second one is asking me for the sum range. So the sum range is for the values. So this is my sum range, which is, it is in column, which column? Column E. That is, itabidi turudie. Hapa nimeclick ingine. So this one should be column C. We locked that.
Hello.
The sum range should be E, which is that one. Also, I have to lock that and then enter. So I can get the summarized information for my ledger is 300,000. And then if I drag it down here, I can get my values here. So anytime I update learn value here, or I put a journal here, down here, I put a journal, assuming we put a journal here of 10,000, let's look at our value of 10,000. Kama hiyo 10,000, it is added here. So you can see 10,000 has been added there. So that's how we use the sum if. That's how we use the sum if. The other one, it uses, this one, it has more conditions. This one, it has more condition. This one, it has only one condition. You can see the only condition here is this ledger. But now, with the other one, the sum if, you can use with more than two conditions. For example, maybe we have a condition here. Another one is assets. So you can see this one is, let's say this is assets, and then the other one is a liability. These are the liability, or we can say debit and credit. So these are debit balance. These are debit balance. Cumulative depreciation, this is credit balance. This is credit balance.
Hello.
And then also this one is credit balance. Credit balance.
Hello.
And this one is debit balance. Now, you can see we have added certain criteria here. We have added certain criteria here, but we have not had it in the old data. We have not had it in the old list of our data. So if I sum this one so that we can do comparison, I think, kindly repeat on the duplicates. Okay. So I think I can put down to this one because I'm getting some kind of noise. So the duplicates I've said, you copy this, Control C, and then you paste here, like that in Q column, you paste there, you leave it ikiwa selected, and then you go to data, Apple, and then there is this X. It depends with the kind of software or the type of Excel version you are using. I'm using 365. That's why we have X here. That one is to remove the duplicates. But the other version, it has been written here, remove duplicates. So once you click that, it will ask you to remove the duplicates in which column. So it is in column Q. So it is in column Q. You click OK. Okay. So, and it will remove all your duplicates. So you will remain only with what? A unique value. You will only remain with a unique value. So I think I've answered your question.
Alafu unaweza rudia the other.
Okay. So once we done that now, let's look at the second one, the sum if. We said the sum if it has more than two criteria. So with this one, let's get the total for this. So this is 1.2. Now we want to introduce another criteria here. That is, it has the debit and credit. It has debit and credit. So we will say now, the sum if with S, this one. So it is opposite. So the sum range come first, unlike the other one, which is coming last. So this one, the sum range come first, which our sum range is column A. We lock that and put a comma. Then it asks us the criteria, the first criteria. You can see this one. It has criteria range 1. Criteria range 1. So our criteria range 1 will be, let's say, our ledger, our accounts, or the chart of account, which is this one. And that also we lock that, comma, first criteria. So our first criteria will be our chart of account, which is this one. Comma, that one we don't lock because it keep on changing. And then you can see here, it is asking you for the second criteria range. The second criteria range. So our second criteria range is now this one. This is debit and credit. Debit and credit. If I click, let me move this one, D. And then I locked that. And then our criteria, we will put it here, but we will lock that. So let's put there, but we will lock, so you can see it is 0. So let's separate this, debit and credit, but it should be the same with this one, debit and credit here. So I can copy this. Let's do a transpose. Do you still remember how to do transpose? Control at V, you paste the values, and then you do a transpose. You get there. So now you can see you can get a value. So we will lock this so that we don't move it. We will lock this Fn. Now I've locked that. So if I drag it this one downward, I can get my values, debit and credit, debit and credit. So you can see this is credit, this is credit. If I do the total here, I can get the total, which is not equal to this. It is not equal to this because I didn't use all of the formulas. So you can see how to apply the sum if function when it comes to summing the certain data with the same ledgers account, So that is one of the formulas which we are going to apply in this question, So now, have you seen the question in that PDF? So you only find the name Safari Limited.
Yes,
so if you have seen the question, then now we can go and do this question. So we have been told this guy has prepared this statement, or they get an extract from the books of Safari Limited, and this extract is not a complete, but the auditor wanted a schedule. The auditor wanted or prepare an audit working schedule for having 5 sections for beginning, trial balance. So the first one, they need a beginning trial balance, end year draft trial balance, and adjustment, profit and loss, and the statement of financial position. So they need the beginning trial balance and also the adjusted trial balance and the profit and loss account. So the basic here is the basic knowledge, the knowledge of financial reporting, and then now you bring in knowledge of Excel. So I don't know how good are you with the journal entries. So this company, the beginning year of financial year is 1st January, or the end year is 31st December 2021, which means January 2022 is the beginning financial year. So any value which is of January 2021 will help us to develop what? Would help us to develop a trial balance at the beginning. It will help us to develop a trial balance at the beginning. So this trial balance, from there, you will do debit and credit, because you can see the question they have given you a clear indication that use debit and credit. Yes, each session should have the debit and credit debit and credit columns. Therefore, 8 columns, which mean they need adjusted, and the other one, the adjustment, debit and credit adjustment, and the profit and loss at the end. That could make what? 8. So, but we can't just prepare the adjusted journals or the journal. So let's use this. Let's use this one, because this mine is automated one. We can't use this one, so that I will show you how to do to apply Excel function. So don't mind with date. So now we'll just copy the data, or we can't go here. Let's have it here. Yes, so we'll have debit and credit here. We'll just copy this data at the beginning. Where is it? This one. We'll copy this one at the beginning, Control C, and then paste in which sheet? Let's do it in sheet 2.
Hello.
Let me copy values, Alt V.
Hello.
Control C,
Unanisikia sasa?
Alt V. Let's copy values. So if you copy values, this is what we get. So we are getting this. We are getting this. We are getting this. Now, remember, you must have debit and credit. So we must have debit and credit. We must have debit and credit. You must have debit and credit. You must have debit and credit. So it is the same. So now you can see land should be on debit. Building at cost should be on debit. Accumulated depreciation should not. This one is the credit balance. So cut that and paste. This one we could have pasted here. So we cut that one. This is accumulated depreciation. Cut this and paste it here and paste there. And then furniture should be on debit. Accumulated depreciation should be on a credit balance. Paste that one. Inventory, debit. Share capital, share premium, long-term loan. These are on the credit balance. So from there, we can have now, let's delete this.
Hello,
We
unanisikia?
can have now our trial balance, but as this trial balance, if we sum this, we get down here, 396,500. I hope you can see. What about if I sum the credit? This is 29,300, 3,000. So this trial balance is not balancing. So which means their values here, we still have to do the adjustment. So ukiangalia hapo, hakuna kitu ingine ilikuwa ya 1st January 2022 in additional information. So we have we go back to the cash ledger. So we go here, we have cash. That is, this is cash. This is bank. So we will have bank. I have my note, it is here. So we will have bank. The value of bank we can equate equals this. This is at the beginning, balance as at 1st January 2022. Put that. What else? Cash. You will put also cash. You will put cash equals the cash at the beginning. It is 620 that. What else? Account receivable and account payable. Account receivable and account payable. So if we go to account payable or trade receivable and trade payable. So let's equate. Now we need the beginning balance, not the closing balance. Is it account receivable? The beginning balance is this. Account payable equals, we equate to this account payable. Is it the same? Is it giving us the same value? So it means this one is wrong. Account receivables, they have the same values. Or this one is the other one. This one should be this. That is okay. Payable is on the credit side, which is the little one. Payable is that one. Now, so we have all the data or all the opening balances. We have all the opening balance. So let's look at whether this trial balance is balancing. So let's sum debit and credit. So if we sum this, That is 433. That is 433. This one is 293. So there is a variance. So this minus this. So this depreciation, these assets is not, but this payable should be on a credit balance. So there is a variance of 115,840 because this trial balance should be equal. So it means there was a reconciliation item also here. There was a reconciliation item here, or the adjustment, which they have not done in the first trial balance. So our account will not balance unless we do adjustment of this 115,840. So we will do adjustment because asset is more than compared to the liability. So which means they injected some capital, but they didn't recognize. So we will put it here, share capital, but in narration, you have to say a credit balance adjustment. Or we can't have a trial balance, yeah, because they want, so I want to do like as per the examiner, but for me, if it is for me, I could have used some of the advanced Excel formulas to apply, but let's do as per the examiner. Examiner ametuambia we should have the debit and credit for each and every session part. So this one is the beginning, or what do we call beginning trial balance? So we can call it here beginning at trial balance, and then we go here in this side we say adjustment. So this is what normally auditors does, the adjustment, and then we will prepare the P&L here. So once we get our adjustment here, or the adjustment, and then we can get adjusted trial balance, adjusted, do we write adjusted? Adjusted trial balance, that one. So this adjusted trial balance also will have debit and credit. We'll have debit and credit here. So how many debit here and credit? 1, 2, 3, 4, 5, 6. So we have 7 and 8, that is for P&L. 7 and 8, that is for the P&L, debit and credit for the P&L. But you can prepare the P&L separately. So that is the first one, because we will do adjustment. We will not do, we will do adjustment here for that. So you can see the first one, it is not balancing because of what? We don't know. There is a variance of, 115,840. So we'll do adjustment with that. So unless there is a question for that, before we move to the adjustment. So if there is no question, then we can move to the adjustment. So this adjustment, we will start with the first one. This one, 118, the variance of 115,840. So we said that one, we should adjust our share capital. So our share capital here should have a credit adjustment. So here should have a credit adjustment of 115, 840, 840. So that we can't have it here. It will be this one plus the share capital ni gani? Oh, this one is your share premium. Is not share premium. It should be this one, 115, 840. That is an adjustment there. So we will adjust our balancing figure for share capital will be that one plus 115. So that is adjusted balance for our share capital. Then now we go to the additional information. We do adjustment. We do adjustment. We do adjustment. Now, if we go additional information to do adjustment, we have been told, number one, the owners introduce additional capital by cash, of which 800 was agreed as the 800,000 was agreed as a share premium, So if we look at in the cash account here, if you look at the cash account here, where is it? The cash ledger or cash in hand, we haven't seen the capital. We can see the capital here, but it is not equivalent to, maybe it was totaling to, because we can only see here 585, but we have been told it was the totaling to, or 850 used by cash for what? Owners reduce additional capital by cash, of which 860 was agreed as the share premium. So which mean out of this capital here, which they introduce here, this one, because we can see capital here. So maybe this is the one. So this 850, which is here, is this 150 is the share premium. So you debit the cash account and you credit the share premium. So which mean in our ledger, we will put a share premium. The share premium will have a credit balance here of 850. Remember to make out 3 zeros. So it should be 850, which now we'll have this plus this, that we can have that. So we go to the second adjustment. The second adjustment is that land is to be revalued upward by 10 million. So what is the journal entry? Because I'm teaching and you have done to the CPA. So all these things should be the one telling me what to do, where to debit and where to credit. So where to debit and credit that transaction? Tutaiweka wapi na wapi? Yes? The revaluation of land. Tutaiweka wapi? How do we treat that one? Tuko pamoja ama inaenda haraka? Surplus on credit. Yeah, so it is surplus on credit, but which? So we have to create which account? So we will create which account? That's why these are business data analytics. So we don't assume that it is basically for analysis. So you have to have the knowledge of accounting and financial reporting. So if we do, because examiner wanted for debit balance, so we can have the debit and credit balance here so that we can use this one to prepare the income statement. So that one, it is a revaluation gain. So if it is a revaluation gain, it is a surplus or it is an income, which we will bring it here, a revaluation gain as an income. So we will credit that value of 10,000 because to make it 3 zeros. So we will credit that one in the income statement or the P&L, that is 10,000. And then we debit the asset account. So the asset which is land, which is this one, so we will debit, we will have a debit adjustment of 10,000 here. So we can equate with this, that one. So that currently now we can have our debit adjustment, which will be this one, plus this, plus this, minus this, which you can have that one. So that is a debit, no, it should be, this 10,000 should not be here. It should be on the adjustment here. And this value should not be here. It should be this one, adjusted trial balance. Adjusted trial balance now. So we have done with that note. We go to which note? We go to which note? Note number 3. The following amount has been agreed for depreciation. We have building, motor vehicle, furniture, building, motor vehicle, furniture, and equipment, and the equipment, and the equipment. So what do we do with that? That one, give me the journal entry for the third adjustment. We debit the assets, credit depreciation. We are reducing, depreciation is the reduction in value of an asset. So if we debit the assets, what happened to the asset account? Are we reducing the asset or we are increasing the asset? So you have done the opposite. So we will debit the depreciation and then we credit the asset account. The asset account, or we can't use the accumulated depreciation because they have already have the accumulated depreciation. So at the end of it, we will use this accumulated depreciation to reduce our assets. So instead of debiting the asset, even we can debit their accumulated depreciation. So I will come here, say depreciation. We can do, we don't need to do the cumulative value, or we can do the cumulative value. So I will copy this, Control C, copy, put it here, Alt V, let me paste the values. So these are depreciation. Remember, we can put it here, depreciation. Also this one. Also, we put this depreciation on this. Now, so it should be on a debit balance. These are expenditure. So we should debit this because they are expenditure. You should debit. So once you debit that, we should credit the revaluation. We should credit the accumulated depreciation. So if you look at the opening balances, we had accumulated depreciation on building, which is this one. So we will increase this value. So we will increase this value of 15 million, which mean I will credit here. Tabidi niweke kwa kidogo ndio nione. Can't see. So I will credit this value. I will have a credit adjustment here of building, which is that one, so that I can have the value here to be this one plus this. So that is my accumulated depreciation for building. And then come to the second motor vehicles. We didn't have a motor vehicle in a trial balance, the beginning trial balance, but we will have it in the adjusted one. So we will have it in the adjusted one. So which means we will have an account for motor vehicle here. We will have an account for motor vehicle here. So at the beginning, hatukuwa nayo. At the beginning, hatukuwa nayo. And also we will have accumulated depreciation on motor vehicle also, which we didn't add. So it will, this one, motor vehicle. So it's like we are doing audit here. So, but now you can't be an auditor without understanding the accounts. So that's why we need to refresh ourselves with accounting. So if you come here, motor vehicle, we have accumulated depreciation. So we will have the both credit adjustment and the debit adjustment. How? Because this motor vehicle, we don't, at the moment, we haven't seen the value of motor vehicle, but we have accumulated depreciation, the credit adjustment upper on this one, itakuwa this value 14. So that is our credit adjustment. And then now we go to the which one? Furniture and equipment. So we will credit the furniture and equipment accumulated depreciation, which is here. So we will increase 25. Here we equate with this value here. With this. So let's do the adjustment and then we will add them later. So that is it. So we have done to the accounting for depreciation. We have done for accounting for depreciation. We go next. Just a minute. So the next is the following adjustments are necessary. So we have accruals and the expected losses here. So how do we treat accruals? Is it a liability, expense, income, assets? How do we treat accruals? Is a liability. Now pass for me the journal entry for that adjustment. So how do we do to try you debit wapi to credit wapi? I'm waiting for your guidelines. We credit accrued admin expense and then we debit which account? Because in accounting, there should be debit and credit. If you debit another asset, you should credit another asset. Yes, and we debit admin. But do we really have that admin expense? So we will copy admin expense. We can see we have administration expense here in our bank account. We have administrative expense. So we can copy that administrative expense, bring it here because it is an expenditure. So we will increase that one. So we will say equals the value in the administrative expense, which is this one, plus the accrued one, which is plus the accrued one, which is here. Accrued one iko wapi? Hapa plus the accrued one, which is this. So plus that, we add that. Now we have done one debit. So we'll have another account, which we don't have it here. So we bring in another ledger here. We'll bring in another ledger here, which is this ledger is accrual. So we will bring in accrual ledger here, accruals with the credit balance. So accrual with the credit balance, I hope this is a credit balance, equals to that value. So I think it's equals to this value. So plus, yeah, we have this value. So also that one is accrual. We also have income expenditure is accrual. So we can say equals to the sum of a comma with income expense. That is also under a liability. So we have a credit adjustment of accruals of that. And then we have an admit there. So we can go to the next one. Next one is the prepaid operating expense. So if you go back to your cash account here, we have operating expense here. So we debit the P&L, we debit this as an expense, we debit the P&L, we debit the P&L here. So I will bring there equals to that value, which is, it is here, that one. But I will subtract the prepayment. Remember, we have a prepayment down here. So I will adjust to the prepayment. Prepayment here ni ngapi? We have prepaid operating expense. So I will adjust to this prepayment so that we can get, why is it? It is a negative. Does it mean this is more than? How much is the prepaid here? Prepaid here is operating expense. So they paid that one, but so still they are, but should not be a negative. So it means they pay more. That's why giving us a negative, but for us to avoid this negative, we can't do the journal. Do we do that? We debit. Yeah, so I think it will not affect the expense account because you can see it is even over that. So the prepayment will not affect the P&L. It will not affect the P&L. So we will remain with the P&L with that, but it will affect the prepayment account. And the prepayment account here. So we'll have the prepayment account, which we debit the prepayment account. We will debit the prepayment account. So the prepayment has a debit balance of equals to this amount here. is it 2100? And then so you will guide me whether if I'm making some mistake, and then so that we correct it as early as now. So I think we have done the adjustment up to the prepaid, the income tax. Also, the income tax we will subtract from the profit and loss account. So we should debit the P&L and we credit the income tax account or the liability account. So in this case, I've opened a lot of Excel sheet. So we have an income tax here. It is an expense, income tax, but it should come last. That one should come last, income tax. So we should debit the income tax of 15,600. What else? The credit loss. The credit loss is just a bad debt. So they are just using another name to confuse us. So that is basically bad debt. So bad debt, we will use that value, which is bad debt. That is 1,700. So we debit this, but what happened to account receivable? We debit the bad debt as an expense and then we credit account receivable. So our account receivable here will have a credit adjustment. So here, our credit receivable should have a credit adjustment here. Should have a credit adjustment of 1,700. Should have a credit adjustment of 1,700. So once we have that, also we have been told expected provision. So we have the provision of bad debt, which is 10%. Expected loss, provision for bad debt, 10%. So provision for debt 10%. So it is 10%. It is 10% of the closing value of inventory. So I will multiply by the closing value of inventory, which is there in our trade receivable account. That is 2,700. So I can get that. So also this one should reduce our account receivable. So we should also need to adjust our account receivable. It has the credit adjustment. So we should combine with this. So I will say equals this plus this plus that. So we can have that adjustment. Go back to the illustration. So do we still not have any adjustment here? So I don't think we have any adjustment. So we have done to the adjustment of assets and liabilities. So assets and liabilities, we have adjusted everything. So what is remaining now is our profit P&L account, because we have not copied all the information here. But for assets and liabilities, we have already exhausted that. So we can have but there is a lot of expenditure, which also it will affect our assets account. So let's go back to the expenditure first, because it will also affect this account. Look at our expenditure. Let's start with the account. Let's start with the cash at bank. Cash at bank, they paid payables of this. They paid payables, so which means we will reduce payables by 107. Makula text. So we will reduce by 100. So payables itakuwa na debit adjustment ya 100, 070. So go back here. Where is a payable? Payable in our account here, it is here. So it has a debit adjustment. Itakuwa na debit adjustment of this value. And then ikiwa na, if that is the debit adjustment of that value, we go to the second one, distribution expense, admin expense, and operating expense. I think we have that's why operating expense here, it is not 1200. Nilikuwa nimepick gun, ikanipea negative. Oh, this one. So it should be this one. That's why I was wondering, why is it this one is negative? So we can have distribution expense, a loan expense, dividend, all this. So we can copy this event with the values, or we can't just, you will link to the values, copy this, go to your trial balance here. Where is our expenditure? Alt V, copy values. Let's link, these are expenditure, so it will be having the debit, but admin, you had already adjusted admin. So admin, itakuwa 2, so we will have to remove the other one. So we have here, this is administrative, distribution expense. Administrative tulikuwa tumeiweka hapa. So we will add another one plus what is in the cash. Hiyo ingine ilikuwa kwa bank, what is in the cash, which is 53,300, so that we remove this one, avoid duplication. Operating expense, actually there is this one, so plus this, what is here, also minus this one, prepayment, so that we don't now get the negative, minus the prepayment of 2100, so that we can adjust our operating expenses there. We remove this one. Loan, we don't have another one, so loan will come here. Loan will come here. We equate with that. Go to the case study here. Here is the value of our loan, cash bank account. Here 15. And that we have dividend. They paid dividend, but dividend and income tax should come first, but let's put it there first. Dividend, also they paid dividend of 2,000. Motor vehicle, so they purchase a motor vehicle. So motor vehicle will not affect the P&L, but motor vehicle will have a debit adjustment here. If you go to the motor vehicle value here, here it is, you will have a debit adjustment here. A debit adjustment. So they put a motor vehicle debit adjustment here of 73. So we have done with the bank credit side. So let's look at the debit side of the bank. Let's look at the debit side of the bank. So what is in the debit side of the bank? We have receivables. We have receivables and cash in hand. So they reduce the receivable. So they reduce the balance, the opening balance of the receivable. So what will happen to this? We will debit the bank account and credit our receivable. So I will come here and have the debit adjustment and the credit adjustment. Where is our account receivable? Our account receivable, I will have a credit adjustment here plus what they paid, which is in the bank here, that, and then no credit. Yeah, so we will do it. So and then we debit bank. So bank itakuwa na debit adjustment hapa equals bank plus this. So it will have that debit adjustment. What else? We go to the cash in hand. Cash in hand, we credit cash, we debit bank.
According to public participation,
Cash, we credit cash. Itakuwa na credit adjustment.
The same 99%.
We debit bank, so we will increase still this one. We increase plus this.
That's according to
That
the
is our
public.
debit adjustment. Go back to the second one, which is cash in hand. So cash in hand also they pay a payable. So we'll adjust the payable. We'll adjust the payable. We have already adjusted this one. So we have already adjusted this one. And also we have already adjusted this one. And also admin. Have we adjusted administrative? So I think we have adjusted this one. We can color this because we have already adjusted that. Let's put another color. We have already adjusted these so that we don't repeat ourselves. So we are remaining it payable. So we should reduce our payable by debiting payable and credit the cash account. But also hatujafanya adjustment ya expenditure juu hizi ni cash. So tutafanya adjustment ya expenditure ya kwa cash so that I should delete this one. Hii ndio I have a lot of data here. So payable, where is payable? Payable is this one. So we should debit payable. Mbona payable ikakuwa na debit balance hapa? Yeah, this is payable. So we should also plus what is in the cash. Where is it? This 18. Also cash account, we should credit cash account this value, the sum of, you can say sum of this yeah, it's not picking. So let's do it manually. So it should equate this plus this plus this. So that is should be credit balance. So which mean tulikuwa tumeiweka 140 something. So the remaining one is this one plus 37 plus 600. So that you can have that one. That is a credit adjustment. That is a credit adjustment. So I think we have done with the cash credit. Let's go back to debit. So if you go back to debit, we have this receivable. So we will debit that one, we credit receivable. So go back to cash. So cash, we should debit that debit balance here is cash. So we should have a debit balance of this value and credit balance, and also you should have another debit balance of plus this 58,800. So that so remember hiyo 58,800 kuna hii ingine na kuna hiyo debit hapo na tuka credit hapa. I think so we have done with the cash account. So let's move to the account receivable. Account receivable tumesha adjust na debit. So debit tuko na sales. So tuko na sales hapa kwa debit, which nitakuja kwa sales. I have to debit, I will credit a P&L account and then I debit receivable. So I debit receivable kwa sales. Where is receivable? Yeah. So I have debit adjustment here of this 300, and then I will credit sales account here we can start up their sales, which we should credit the value of that value. So we go to the trade payable. Trade payable, we have the purchases, so we should credit, we debit the P&L, then we credit the payables. So we'll come here. Where is our payable? Payable, this, we debit this payable, we credit the payable. Payable itakuwa na credit adjustment. Payable itakuwa na credit adjustment ya 123. That, and that we'll have the purchases here. Also, it will have the debit bar. Kwani nimeandika debit na credit ingefaa ikue. I think in narration, so we can't copy this and put it here. You can say this one is the narration. So which means this one should be on this side. And then purchases should be, we equate with that value. So we have done it with the credit of the purchases. Cash in hand, I think we have already, we credit to measure malizano na hiyo na hii. So that 142. Okay. So from there now you can get the balances, adjusted your trial balance, and then get your P&L. So I think I've done up to the 80%. So let's get the adjustment here. So for this, we will say debit minus credit, debit minus credit, debit minus credit, hii ni gani? So for all the assets, even this one, so there is no adjustment for building. And then what is this? Hii ni depreciation. So depreciation, we will say this is the, we can't have, this is adjustment. So depreciation, we will have 20,000 there. What about this one? This one is furniture and fitting. So we don't have any adjustment there also. This one plus this minus this, which we don't have anything. So it will remain the same. What about this one? This is furniture. So iko na debit adjustment. So iko na credit adjustment. Hii ni credit but haina adjustment. What is this? Haina adjustment. Tulikuwa na accumulated depreciation ya furniture. Oh, that was the beginning balance. So this was adjustment. So it should be this plus this. So that could be the closing balance. Now go back to this one, tulikuwa tumeshaweka hiyo share premium. What is this? Interest on loan. Even though we have seen the interest on loan is reduce the loan value. So loan value, there is no adjustment. This one now ndio ziko na adjustment. So bank should have the debit or either a credit balance. So we will take that, this plus the debit side minus we should have the credit side. So hatujaweka credit side. So we should have the credit side here. So bank ni gani tulikuwa tumelipa na hapa, which we have them in our bank ledger. So if you go bank ledger here, you should have hatukuwa tumeiweka this one. Payables, is it receivable? But tuliweka, so I think so. Nimekuwa confused sasa na hapa. So we should have the sum of all these, because this one imetoka kwa bank. So we should have the sum of all that. Yes. But now we can see bank, we have a credit balance of 12,250, which will be the same with this. So that is it. So the bank account is now correct here, but it should be the credit balance. So the negative value should be on the credit balance, So which mean you can bring it here and change the value, put negative here. So multiply by negative 1. Multiply by negative 1. What does that mean? You can get the sum of this. Yeah, so that you should have a credit balance of the bank. That's why it is a negative. We go to the cash. So we should have the same formula for cash. Cash, check this plus this minus the credit balance of 1900. Is it the same with our ledger there? Our balancing figure 500. So there is one which we haven't captured. So the closing balance for cash is 500, but we are getting 19,000 here. So which means we have to revisit back that one. Let's color that one first. We'll revisit that. What else? Receivable. Receivable should have a debit balance, so it will be this one plus this minus this. You're getting 179. 930. Is it the same with our account here? It is not the same. So there is something that we are missing again. We colored that one again. So you will be the one identifying the errors. Why is it that that one is not coming the same there? Then payable. Look at payable should be a credit balance. So we should have this plus this minus the debit. Should have 14,200. Let's look at the payable. The payable is 14,200. The credit balance, yes. So payable is correct. Payable is correct. So these two are not correct. We go to the asset account, motor vehicle account. That one should have a debit balance. We don't have any other balance. Should be the same with that. What are these? Accumulated depreciation and accruals. This one should have a credit balance also of 14,600. This one should have a credit balance. I don't know why is it accruals. Accruals tulikuwa tumeiweka. No, another one tingefaa kwa debit. This is accruals. This one ingefaa kuwa debit hapa. That's why it is confusing me. So this one will remain the same. We should have the credit adjustment here, and this one should have a debit adjustment here. Let's see whether this trial balance is balancing. Let's sum. It will not balance because of the assets, the cash and receivable. That one is 63. The other one is 48. So if we get the variance, we have 142, 0, or 4. So do we have such a value? So it will take us back to the bank cash in hand. To check whether we have captured everything, because if this trial balance is not balancing, which means also we need to bring in the purchases here and the sales. Remember, hii account hatujapata sales, but lazima adjusted trial balance, lazima weke sales and purchases. So we will bring that column also, sales and purchases here. Ama tungefanya best way. But since we haven't captured the expenditure and the expenditure in this all the trial balance, then there is no need to bring the sales and purchases here. So if we could have bring all these one in the trial balance, then we have to do what is called, we have to bring all the expenditure and everything there in the trial balance. Then we will come back and prepare the P&L. So it will require us again, we go back. So let's look at this cash. Mali tumekosea cash. So the opening balance is that. You go to the hizi zimekuja wapi, case study. Ini bit 22 and bit 23. So it should be on a debit. So if we go to the cash, that one bit 23, which is this and this, that is 168 plus that one. So the debit balance is okay. So it means the balance, the credit balance is the one which we haven't captured. Correct one. So we must have this, which is we should have. So this we should have B12. We should have B12. B12 is B12. B12, D22 and D24. B12 iko wapi? B12, can't see. B12 is the B12. B12 is cash in hand. So cash in hand, we don't need to credit so it is okay. We set B22 this value, and then we add these two here. Then we need to add this D21 and D22. Let's see what we have that one. D21. So we only have D22. So we don't have D21. So we can say plus D21 18. We add that. And then what is now, we can have the balancing figure is coming to 500. It's coming to 500. So I think that one is now okay. So this one is okay. So cash, the balancing figure of cash should be 500. That one is okay. We can uncolor this. You can uncolor this. Now let's have account receivable. This is B31. B31, notice this B31 is for sales. That is okay. But sales, what happened to sales? Do we debit the account? But maybe this sales was on credit. It was on credit. That's why we have to debit account receivable. So that is okay. But now the credit balance is the one to see not. Okay, yeah. So let's look at what is happening with. So have we put all the credit balance? Bado tuko pamoja ama usingizi imeingia? Are you still following? Okay. So let's identify what happened to account receivable. Account, is it receivable? Yeah. So we got the balance of that, we add the sales. So the debit balance should be at 369,490. It should be the same here. Let's go to the account receivable. So it is the same. So you have to recognize these two. You have to recognize this 163 and 185. This 163 and 185, it was in which part again? So it was here in the cash. So we have to recognize that one, which is tumesema B what? Tumechukua only K 17 and 18, that was bad debt and then tukaongeza B11. B11 ni gani? So go back to case that B11. So B11 is okay. So what is missing is this one. What is missing is B20. No, the cash. This is, yeah. No, cash. What is missing is B12. So we should add B12 here. Where is it? This one. We should add plus B12, which is this. So that now we still have the variance here. This is 333,880. What is the balance here? Account receivable. So what is the variance here? So we have 33,880. So let's check the variance. So we have 13,180. Where is that 13,180? In fact, it should be less because they haven't had a bad debt here. No, this is from account receivable. This is cash. This is not receivable. Oh, should be cash account. Should be cash account. I'm wondering. So this is not B11, should be in the cash, which is B. This one, B22. B22, so that you can have that one. So the variance, now we have 16,960. 16,960. 16,960. Remember this one, they haven't 16,960. They haven't captured the bad debt. They haven't captured the bad debt adjustment of bad debt, which is yeah. Remember we had the bad debt ilikuwa ngapi hapa? 2100 na ngapi? 10% of 20. So we subtract 2100 here. We subtract 2100 minus 2100. We are remaining with 640. 640 should not be that one because this was 10% of this. Ilikuwa ngapi? 10% of this ilikuwa ngapi? That is 21. So if we add this plus this, should have 4170 at here. So still we have another value 430. I don't know your 430 copy. 430 copy. Don't know 430 copy. But now, so what is the value of our trial balance here? So this is 4. And then this one is 39, 440. So we have that variance. So it is not balancing here again. So it should balance. So credit is more than the debit. So why is umeona wapi discrepancy? Yes. What is the retained earning? Let's see whether we are getting loss or a negative. So when we subtract 358,950 minus the other one to there, in 79 and 60. So we bring in here, we have the retained earning. The retained earning, which is equal debit balance. Equal debit balance over this. So now we have that variance. This one should be negative. So we have that 1,500. So that 1,500 go up here. So maybe let you go and identify where is that 1,500. Because if our trial balance is not balancing, it means our balance sheet will not balance. It will not balance because we need to have a debit, a balanced trial balance, and then because this is what the main focus is, the adjusted one here. This one. So we should color this so that we can have another. We put the color here. That one. So maybe let me share with you these files and then you go identify where there is errors. So juu unajua wewe ulifanya juzi accounting, so maybe you still have fresh knowledge of this. $850. Is this 500 or 5,000 cash? Cash ni ngapi? Tusema ni 500. So cash is okay. And then bank is also okay. It is a negative. The negative. Receivable is okay. Total value of expenditure. The total value of expenditure. Value of expenditure. So you can't have that one, or you can choose another approach. You can choose another approach where we will bring this one later, but what you do, we post all the expenditures even in the trial balance. We have to post all the expenditure in the trial balance, so that maybe because hii tulikuwa tunaipeleka hapo pale, that's why inatuletea shida. So you can't have another one, which that one will be now your assignment. You take all make sure you list all, like tumelist hapa hizi assets zote. You make sure also you list all the expenditures here, so that we can have just one trial balance. You list all the expenditures. Itakuwa expenditures most of the time. See, in fact, not even most of the time, should be on a credit. Oh, this is a revaluation gain. This one should be on a credit. This one is a revaluation gain, should be on a credit here. Should be on a credit there. So you have all the balance. So that one now it will be very easy. You will not have a lot of errors. So let me give you that one as an assignment. But so long as you have seen the approach. Hello. Tuko pamoja?
Yes.
So ukiprint hiyo, it will be very easy. Ni vile tu sikuwa nimeiprint. So tungekuwa tumeprint, ingekuwa very easy because tuna identify this is from here. Then we combine in one column instead. Yeah, so I will share the video. So try to attempt. You can even start a new one. So don't even start with mine. What you do is that you put all the expenses here. But now if you do that, you will find that yes, and you will have few adjustment here. You will have few adjustment here.